Right. So we're going to dive into this story that's pretty interesting.
Yeah.
It's got like high stakes acquisitions and shifting,
Market dynamics.
market dynamics. Yeah. And
A little bit of risk.
a dash of risk for sure.
Yeah.
We're talking about Celsius Holdings, the
Yeah.
makers of those lifestyle sparkling beverages that promise to boost your metabolism.
Yeah.
And their recent purchase of Alani Nutrition for $1 billion.
What's so interesting about this acquisition
Yeah.
is that Celsius is trying to re-energize its growth
Yeah.
by tapping into a brand that's really resonating with women.
Alani Nu, you see it everywhere these days.
Yeah.
They've really caught the attention of female consumers.
Absolutely.
But what makes them so appealing to that market?
Well-
Is it just clever branding, or is there something deeper going on?
It's a combination of factors, I think.
Okay.
Alani Nu's branding is really on point.
Yeah.
They're sleek, pastel-colored cans, and this emphasis on better-for-you ingredients
Yeah.
really appeals to a health-conscious consumer.
Yeah.
But they've also been strategic in their product development.
Okay.
They're offering flavors and formulations that cater specifically to women.
So they're not just slapping a pink label on a standard energy drink
No.
and calling it a day.
Not at all.
They're actually putting the thought into what the specific consumer wants.
Exactly. And this aligns with a larger trend we're seeing in the female health and wellness market.
Yeah.
Women are increasingly looking for products that support their well-being. And Alani Nu is positioned perfectly in that space.
Okay, so Alani Nu is hot.
Uh-huh.
But Celsius has been going through a bit of a cold spell.
Yeah.
They had that incredible triple-digit growth for 3 years.
Right.
But then in 2024, their revenue started to decline.
Yeah.
And their share prices took a tumble. What happened?
Well, the energy drink market is really competitive.
Yeah, it is.
New brands are always coming out, and consumer preferences are evolving.
Yeah.
Celsius seems to have hit a bit of a plateau.
Okay.
They've been struggling to maintain their earlier momentum. This acquisition could be a way for them to inject new energy into their brand and expand their reach.
Okay, so let's talk numbers.
Right.
Celsius spent $1.8 billion to acquire Alani Nu.
Wow.
$1.275 billion of that was in cash.
Okay.
Another potential $25 million based on performance,
Right.
plus $500 billion in Celsius shares.
Yeah,
That's a major investment,
it is.
especially considering their recent financial dip.
Well, if you break down the deal,
Yeah.
it actually looks pretty attractive financially.
Okay.
The purchase price is roughly 3 times Alani Nu's 2024 sales and 12 times its adjusted EBITDA.
Okay, hold on.
Yeah,
For those of us who aren't financial wizards,
sure.
what exactly does that mean?
Okay, so
And why is that 12x multiple so significant?
adjusted EBITDA,
Yeah.
in simple terms, is a measure of a company's profitability.
Okay.
So it looks at earnings before you take into account things like interest, taxes, depreciation, and amortization.
Gotcha.
A 12x multiple means that Celsius paid 12 times
Okay.
Alani Nu's adjusted EBITDA, which is generally considered a good deal
Yeah.
in the consumer goods sector.
Okay.
It suggests that Alani Nu has strong earnings potential.
But there's that $150 million tax asset
Right.
that Celsius is getting as part of the deal.
Yeah.
What's that all about?
So
It almost sounds too good to be true.
that tax asset is an interesting detail.
Okay.
A tax asset basically means that Alani Nu may have incurred losses in the past
Okay.
that can be used to offset future tax liabilities.
Interesting.
So while it lowers the net cost for Celsius,
Mm-hmm.
it also raises some questions about Alani Nu's profitability track record.
So it seems like Alani Nu might have been struggling to turn a profit
Yeah.
despite its impressive sales growth.
Yeah, maybe high marketing costs
Yeah.
or production inefficiencies ate into their margin.
That's a good point.
Yeah.
It's possible.
It's possible. However, Celsius, with its robust distribution network and backing from PepsiCo, might be able to address those challenges.
Okay.
They have the expertise and resources to streamline operations,
Okay.
optimize our marketing spend,
Yep.
and ultimately boost Alani Nu's profitability.
It's almost like Celsius is betting on their ability
Yeah.
to turn Alani Nu into a lean, mean, profit-making machine.
Yeah, I think that's a good way to put it.
Yeah.
Yeah.
Makes you wonder, though,
Yeah.
are there any risks
Yeah.
with this whole leverage our strengths approach?
Totally.
Could it backfire
For sure.
if Alani Nu's integration doesn't go smoothly?
Yeah, integrating a new brand,
I think.
especially one with such a distinct identity like Alani Nu,
Yeah.
is never easy.
Yeah.
Celsius needs to find a balance.
Right.
They want to leverage their resources to increase profits.
Yeah.
But they also have to keep the brand unique
Yeah.
and not turn off their loyal customers.
It reminds me of that whole thing with Crocs and Heydude.
Oh, yeah.
A few years back, Crocs bought that smaller footwear maker, hoping to boost their growth.
Yeah.
But it didn't really work out the way they planned.
No.
Seems like a cautionary tale.
Yeah.
For any company thinking about growing through acquisition.
The Crocs and Heydude story is a perfect example. Acquisitions can be lucrative, but they aren't always successful.
Right.
Heydude was trendy, growing quickly, attracting a different demographic than Crocs.
Okay.
Much like Alani Nu and Celsius.
Yep.
But the integration wasn't smooth.
Yep.
And Heydude's sales ended up lacking.
So what are some key lessons Celsius can learn from that?
For starters, they need a really clear immigration plan.
Yeah.
They have to figure out how to bring Alani Nu in
Yeah.
without losing its identity
Yeah.
or disrupting their current operations.
So basically, don't mess with the secret sauce.
Exactly.
That made Alani Nu so popular.
Exactly.
Okay.
They also need to pay attention to the target market.
Right.
Alani Nu is doing great connection with women.
Yeah.
Celsius needs to figure out why and make sure they don't mess that up.
What's interesting is Celsius was already showing signs of a comeback.
Really?
Even before the Alani Nu acquisition.
Huh.
Their last quarterly report
Yeah.
showed they beat analyst expectations.
Wow.
So they're not exactly limping into this deal.
So Celsius's core business is stabilizing, they're growing again,
Yeah.
and their partnership with PepsiCo for distribution is working well.
Yeah.
This gives them a good foundation to build on as they integrate Alani Nu.
But let's be realistic.
Okay.
The energy drink market is always changing.
Right.
What other strategies could Celsius use to stay ahead of the curve and appeal to more people?
They could maybe try expanding into new product categories.
Like what?
Like ready-to-drink coffees or teas.
Okay.
Those are getting more popular with health-conscious people.
Yeah.
And Celsius could use their brand recognition to get into those markets.
Diversifying their product portfolio.
Exactly.
Could be a good move.
It could.
Especially since the energy drink market can be unpredictable.
Definitely.
Mm-hmm.
Another strategy could be international expansion.
Oh, going global.
Yeah.
I like that.
Celsius is strong in the U.S.
Yeah.
There's a huge global market for energy drinks.
Lots of potential for growth there.
For sure.
Especially in markets where energy drinks are just getting popular.
Exactly.
They could even work with fitness studios or gyms.
Oh, yeah.
The go-to drink for workouts.
That's a great idea.
Yeah.
Those are all good options.
Yeah.
It'll be interesting to see what Celsius does.
For sure.
They could be huge in the beverage industry.
Yeah.
But they got to be smart and adapt to stay ahead.
This is going to be interesting to watch.
Definitely.
To see how this acquisition plays out.
Yeah.
It's like they're making all these big moves
right.
to set themselves up for the future.
Yeah, and this deal really shows the big trend in lots of industries.
What's that?
Big companies are looking to buy other companies to bring in new ideas, reach new markets, and stay ahead of the competition.
But like we saw with Crocs and Heydude,
right.
buying another company isn't a sure thing.
Yeah, it's risky.
There's a chance it won't work out.
Exactly. Celsius has to be careful.
Yeah.
They got to have a good plan. Make sure the Alani Nu brand stays strong and not upset their loyal customers.
So what's the takeaway for our listeners today?
Well,
we've seen that the energy drink market is super competitive.
It's tough out there.
Brands are always fighting for attention.
They are.
And if they don't change with the times, they might get left behind.
It also shows how important it is to understand what consumers want.
Right.
Look at Alani Nu. They're successful because they focus on a specific group.
Yeah, they know their customers.
And they give them what they want.
So Celsius buying Alani Nu could really change the energy drink market.
Definitely a bold move.
Will they become a giant in the industry?
That's the big question.
Or will they make the same mistakes as others and fail?
We'll have to wait and see.
That's something to think about.
Absolutely.
While you're enjoying your next energy drink.
What does it take for a brand to really succeed in a world where what people want is always changing?
It's a good question.
And there's so much competition.
Thanks for joining us for this deep dive.
Yeah, thanks for having me.
We'll see you next time.